How are you guys? Hopefully you guys are doing amazing. It's the weekend. Now we have already reflected on the previous trade, the previous L that we took on Friday. If you really want to learn from the L and you were in the Telegram channel that had shared the trade idea, go back the previous video before this, watch the video. Maybe you can learn what I did wrong and where we can get better. To me, it was a good loss, and I'm explaining in that video how it was a good loss to me. So without any further ado, let's get started with this weekly from 20. Today is on 23rd, 24th, maybe, from Monday 24th. Yeah, Monday 24th to 28th, Friday, weekly outlook on gold. Gonna also talk on the sentiments because some guys or my members also asked me to talk about how I usually use the sentiment. So without wasting any time, we're gonna start from the weekly time frame. And what can we really see is that from the weekly time frame, the market is really bullish, right? The market has been expanding higher, and 3K is really expected from what I've been trying to research on gold. Many market analysts, the financial advisors, are mainly foreseeing that gold might be pushing up to 3K. So can see we have been in a bullish trend, and we want to engage a price going with the trend. So what do I usually do from the weekly time frame? So from the weekly time frame, what I usually try to mark up is the major liquidity pools. And for me, of the weekly, before I talk of the weekly, let's see how the monthly time frame is printing. So the monthly time frame is also kind of bullish. We have 5 days, 10 hours before it closes, from what we can see from the chart. And what we have done is we are now kind of rejecting. We have a small rejection with 5 days. Remember on how every candle's power of 3 happens. So we have the accumulation, which usually happens during the first phase of a candle development, which is maybe during the first or 2 weeks. Then from there we have the expansion phase. We have the second phase, which is the expansion, which the market expands really sharply. And then we have the final phase. We have the accumulation, we have the manipulation, which is in between. Then we have the distribution, and usually after the distribution we usually tend to have some rejection. So if you can see, with every candle we have these drop, this rejection, then the market closed there. Also this one, we had a small rejection, then the candle closed at that point in time. Also this one, we can be expecting something like that. So we can be having in our mind that the market can be maybe weaking to form that upper week, so that we close. Then as of next week, because we are bullish now, as of next month, sorry, because we are bullish, we can expect maybe a drop into the context areas, then we continue higher. But as of now, what we are seeing is it's a bullish candle, but we should have in mind the rejection phase of it. So as of the weekly, as I was saying, what I usually tend to do is I usually mark up my major liquidity pools. What could drive the market either going higher, and what could drive the market going lower. So I mark up the weekly high. Right, there we go, should be black. So we have the weekly high, which if the market is going higher, then those are the liquidities that we can expect to see the market rally to. But if the market is kind of going lower, what could attract the market going lower? Because we are not really certain that the market is going higher. So that's why I don't really want to have that bias that this week we are also going higher, and then the market starts frustrating us. So if we have the two levels, if the market needs to go lower, we have the PWL, previous week's low, which is this the low I've marked, and the PWH, which is this high. So a quick markup, right? So you guys can join my Telegram channel, where I usually share all these insights, and also maybe we take every trade that I take, I will be sharing it off there. I will be mainly also focusing on gold because of what happened. I did make a video on what I think my strategy maybe didn't really work on GJ and USD JPY pairs, so I don't want to get involved in them. So here we are. I will be mainly focusing on gold. So what we can see is I've marked the previous week's high and the previous week's low, which if the market is going lower, then what we can also anticipate is maybe towards the previous week's low. After determining the two things, then I need to identify my context area, an area where maybe I will be expecting to see reactions either going higher or reactions going lower. So from the weekly time frame, what we can see is we had already swept this previous week's high, which is a major liquidity pool, and we can go to the not aligned. Let me delete it. So we had this previous week's high, which could have formed a good immediate rebalance, because I love my context areas are either immediate rebalances or fair value gaps, or what we refer as to fair value areas. And what we can see at this point in time is we don't have any fair value gap, we don't have any fair value area. What we have is a region where we can create an immediate rebalance. An immediate rebalance is a situation where the upper wick and of the first candle and the lower wick of the third candle overlap, forming no fair value gap. For this instance, we had no immediate rebalance because a fair value gap was confirmed. But in this scenario, the first candle and the third candle, upper wick and lower wick overlapped. Also the same, this candle, first candle, second candle, third candle, we can see the upper wick of the first candle and the lower wick of the third candle overlapped, forming an immediate rebalance, and you can see that's what pushed price higher other than this fair value gap. So I usually want to watch that, and since this is our weekly IR and also our previous week's high that had already been swept, so I'll just mark up as the weekly IR should be at the top. Yeah, there we go. So that's the weekly IR, also the previous week's high that has already been swept. So we have currently what we have is a definite 100% immediate rebalance that will be confirmed immediately the next candle opens, because if it opens at this point, meaning they will be overlapping the first candle wick and the third candle lower wick. If the candle opens immediately this candle closes, then it will be a definite immediate rebalance, because that could have already overlapped, right? So that's the level I will be watching as of the weekly, but that isn't really clear, and so we need to do more refining. But if the market maybe on a Monday rallies higher and we see displacements above this IR, then we can engage with price maybe towards the previous week's high, as well as maybe expansion higher. And if we don't really see price delivering to this previous week's high, and we see price start displacing below this weekly IR, going lower, then I will be targeting the previous week's low. But before that, we can also do some refinement from the daily time frame. Off the daily time frame, we are seeing something really key over here. Remember the weekly IR that we've talked about, that is the weekly high that already been swept. And what we're seeing is we have candles closing, all these three candles, we are having lots of resistance at this point in time, and you can see all the candles are closing inside liquidity. Whenever we have a situation like this, then it's not looking good going higher, because candles are showing signals of failing to break through that high, right? Because every candle is closing in the liquidities, because we swept, this is the previous week's high that has already been swept on Thursday. The candle rejected, closed inside the liquidity. If it could have closed above this red line, we could have called that closing outside liquidity, which is a good deal when we want, maybe in this scenario, if we want to see prices pushing higher. But also Friday did that. We pushed slightly higher and then we closed inside. So the PWH, this is the level. We'll see if price will delivering to higher, but as of the daily time frame, that ain't looking likely because of these. It's low probability with this kind of scenario. But also what we are trying to say, or what we are also seeing, is that we had that daily fair value gap, which I used as my context area as of Friday to see higher prices, and it has already been mitigated as price pushed into it on Friday, swept that candle slow, tapped into that fair value gap, and we rejected higher, right? So also we have this, the bullish argument of the fair value gap, we are rejecting higher, but also some bearish argument is that we are rejecting of that major liquidity pool, and we are kind of consolidating. So at this price, a moment in time, we have 50-50 price action, and therefore what we need to do is not to rush into taking any positions, but to wait for price to confirm to us. All right, wait for price to confirm to us what the real intentions of the market is. For now, we're having both bullish and bearish arguments. And also what we're saying is we have formed a low probability fair value area, which is this price leg number 1. We had price leg number 2, or we can have this as price leg number 2, then price leg number 3. So from the high to the low, these are fair value area. And what we want to say is, if the market fails to respect the fair value areas high, then we can anticipate to see the fair value area low being taken. And the fair value area low will be this weekly fair value, the weekly low, the previous week's low, right? So at this, from the daily, we need more confirmations as to which direction we are heading to. As this point in moment, we are having either way, and therefore more confirmation is actually needed. And from the daily, we don't have anything, so we'll be mainly watching what will be happening as of the 4-hour time frame. I don't know, my network. All right, so as of the 4-hour time frame, what we could see is also we have kinda a market maker sell model being formed, because we are now forming intermediate term highs that are not being taken. But what we see is we had the impulse push higher, dropped into fair value gaps, and also we had a push that swept all those liquidities, and then price decided. You can see how heavy the bearish down close candles are. Price created a high, dropped lower, another higher, which is a lower high compared to this. So this is an intermediate term high, which is really protected. If the market will be going lower, then this high is really protected, and we don't want to see the market break through it if we are bearish. But if we are bullish, if we have a breakthrough above this intermediate term high, then indeed we can expect the market to push higher. So in this case scenario, we need more confirmations, and what I will be watching for, if indeed the market will be closing, will be doing something like this, a drop to close below these two up close candles, the consecutive up close candle. If we have a bearish candle closing below that, we could have created a bearish change in state of delivery, and then we can maybe expect something like that, a retracement back, then we have a displacement going like this. And if that don't actually happen, if we see another scenario like this, if the market actually expands from this point in time, we push higher, close above this high, maybe we can expect something like this, then we push higher. So those are the two scenarios I will be watching for. And for me, the first, if we are bearish before even the previous week's low, we have these 4-hour fair value gaps. I don't know, my net, if we will be dropping, which is what I was saying, is first of all, before even the previous week's low, we have this previous day's low, but before also that, we have this fair value gap being fully filled. Right, we have that full filled fair value gap, fully rebalanced. That's what I will be watching for, to see what will happen. If I see market displacing below that, then I can engage with expecting a market rallying to the previous week's low. So this is the fully fill, where we also have 4-hour fair value gap, 4-hour fair value gap at that point in time. So if the market shows me a sign creating changes in state of deliveries, creating displacements going lower, then I will engage with that. But if that doesn't happen, want to see displacements going higher, creating also bullish change in state of deliveries, closing above this down consecutive candles, these two down closes, down close consecutive candles, and also if we close above these highs and also these highs, then we can be expecting higher prices. So that's my outlook for the weekly time frame, and yeah, that's what I will be trying to look for. Wait for price to confirm to me, because this week I want to only engage in high probability weeks setups, I mean, because last week I closed up my week really negative, so I will be trying to take a plus setup. So that's what I'm expecting. If you have any query, feel free to let me know, and we can talk more of this. So until next time, guys, be safe, everybody. I've remembered, we want to see also what we talked about, the the sentiment. I talked about how I usually use my sentiments, my week, the XAUUSD sentiments. What I usually go is to my FX book. I try to see what is gold really doing. I was looking at silver. Most people are longing, right? You can see 57% of the individuals are in longs, but usually go against the masses. So if individuals are longing, usually you need to be shorting. So let's see whether we have gold. All right, let me close it. Let's see what is the sentiment for gold. All right, the gold sentiment of my FX book. Come on. Yeah, so as it's loading, hopefully this week will give us amazing results, and we'll try to follow the plan. We follow the plan, and I'm pretty sure my network is stubborn, and I'm pretty sure we'll attain the results that we want. If we read over here, XAUUSD sentiment, 58% of the forex traders are currently going short with XAUUSD with an average price of this, while 42%, meaning if 58 are shorting, then 42 are longing, right? So we need to go against the masses. So if majority are longing, are shorting, then we need to look for the opposite prices, which is going longs. But we need to have this sentiment must align with our technicals. If we don't have really the technicals aligning with that, then can call it maybe we need to engage with technicals, and these should go in line with it. So until the technicals align, then we'll use this to our advantage and go in line. So that's how I do use my my forex, my FX book sentiment. Again, we usually tend to need to go against the masses, and with that we can call this a happy weekend time. Kind of sunny. Let's enjoy. Let's wait for Monday and crash it, man. I see my network is back. Yeah, have a week. The breeze, man. Yeah, we can see 58% are shorting and 42% are longing. Not kind of big difference. There's no big difference there, but yeah, we need to go against the masses who are currently trying to call the high. So until next time, guys, if you have anything, feel free to let me know, and see you later.